Okay, hey everybody, this is Brett Fogle with our weekly TA session here with Max Wright's channel, and enjoying all the comments I've seen for you guys. Hopefully you're enjoying this so far, and if you are, do me a favor, hit a like below, share some comments, hit subscribe for the channel so we can doing these, which we're planning to do every Thursday. So, all right, what are we looking at here? Some news. What's going on this week? Big news is Tesla has sold or announced they sold 75% of their Bitcoin last quarter, or between the first and second quarter. Was just released yesterday, probably before their earnings, right around their earnings. But that would explain some of the sell-off in the markets here. So that's now open public news. But sure enough, Michael Saylor taking his chance to take a shot at Elon, basically saying that if you sell 75% of your Bitcoin, you only have 25% of your Bitcoin. And so, a little bit of a battle of the billionaires going on here. Certainly, we kind of saw that reflected a little bit in the price yesterday. I was expecting we'd kind of come back down from the $24,000 area, which is what happened here. We'll get to this in a minute, but this was the sort of a curiously timed announcement of the Tesla sale right at this pivot here where I was expecting us to drop and head lower anyway. And so I always said, show me the charts, I'll tell you the news. And that's sort of a good example of that. All right, so let's jump back into some more news here. We've got Bitcoin sliding off as that news landed yesterday. But the good news is the crypto market is over $1 trillion once again. So even with that Bitcoin brief sell-off, crypto is still above $1 trillion and holding at that level, which we'll look at here in a minute, which is a good thing. Question is, will we be able to hold that level? On the positive side, Ethereum basically saying that, they are, this is not on the page here, but Vitalik is basically saying that they're only about 53% finished with the development of Ether once the merge happens. But preparing for the merge, institutions are going long here, as this article on the block says. Institutions going long on Ethereum as the big merge approaches, according to this source here. So kind of flying through the news here so we can get to the charts, but not without some scandal. Here we have a former Coinbase manager and two others charged in a crypto insider trading scheme. So more bad news for Coinbase. All right, well, let's jump over to the charts and have a look at what's going on here. So we're going to jump to the monthly chart and just kind of see. Now, this is a bit new. I didn't have this last week, but again, I'm looking and showing here the last three market cycles. So I'll just bring that title down, and then the blue here, I'm going to explain what this means in just a minute. So this is a chart overlay of the last market cycle, trying to get some clues on what could be happening here. And forgive me, I'm trying to grab this to move it out of the way. So these two are the same, just condensed. I'll explain what that means here in just a minute. So essentially, the last three market cycles, we have seen 85% drops from top to bottom. Here, about 86% in the 2014 to 2015 bottom. Similarly, in the 2017 from the peak, December 17 down to the lows here, and for sort of February of 19, as early as December 18, 84.26%, call it 85%. So with that in mind, people are looking for, and we might expect we would go 85% top to bottom from this current cycle high, which would put us at around 12,000. So that's the big question. Will we see a similar 85% drop, meaning we're going to go lower here? That would certainly seem so, although I think we will sort of consolidate a bit here for a week or so. The timing is unclear, but if we lose this 20,000 level again, which was the former cycle high, and we are already below this blue line here, which is on a monthly basis, is the, just want to double check, the 50-month moving average, and then head possibly to the 100-month moving average, right? So that would put us down around this 12,000 level, and even to the 10,000 level. Many people are talking about, will we see 10,000? Personally, I think we could, and there is, I think we could capitulate below that. There's a CME gap right below that, and certainly that would cause the most amount of pain in the crypto markets, but really create a very solid foundation to build from. And I think with the mass adoption and everything happening that, you know, and certainly stress testing the system with a lot of the problems crypto's been having. You know, really, you have to have those in some ways to know where the stress fractures are, to know where the problem areas are, to create and fix those and create a very solid foundation to build upon, if we do believe, as many, including myself, do, that Bitcoin is the rails of future finance, global finance, and some of the other top tier 1 projects. So what we're seeing is a big deleveraging, a lot of this growth here fueled by the 35 trillion or so in the global markets, printed money injected into the system, which a lot of it wound up in these capital markets. So it's taking a while to deleverage and sort of flush that out. And so this is not going to be most likely a, you know, very fast V-shaped recovery. You know, certainly back in this market cycle, once we had the drop below of this 20-month moving average, right? This is fairly characteristic, comes down to the yellow line, the 20-month moving average, and holds briefly, then breaks down to the 50-month. We saw it there, saw it here again, and held in the 2018 area, but it's sort of holding. Okay, so I mean, you know, I think we could see some kind of a bounce and a relief rally here, but how long, I don't know. And we'll look at that here shortly. I think probably in the next few weeks we'll start to drift lower, but certainly holding here temporarily. And maybe, you know, I see July's candle wind up as a small green candle. You know, that would make sense, because then it's sort of, you know, and it's retested the midpoint of this big red candle. Some people call them vector candles. And so generally, though, that will happen, a large candle to the upside or downside. That midpoint is often tested. So this is another example of this, and is why I was predicting we would come back down, and am predicting we'll come down to this 16,500 level or so, because that's this midpoint of this green candle. We did come down and test these other ones here. It's not an exact science, but often we'll do that. But if we put in and close this month as a green candle here, then and even a little higher, then I do think we roll over and head back, head lower to 16,500, 17,000. That on the weekly charts will be the 400-week moving average, which we will take a look at. The 300 and 400-week moving averages, rather. The 300 is below us, around 16,500, 16,700. Call it 17,000. The 400-week moving average is down around 12,500, which is also this green line, right? And this top from back in 2019. So I am thinking we are going to go down to the 12,500, the green line here on the monthly basis, as the 100-month moving average. This line here just below it is the $10,000 mark, that psychological level. So let's dive into a little bit deeper, but before we do, this here, I started to explain this price pattern, this right here is an exact overlay of what we saw back here, okay? So modified a little bit, which, you know, like this, and then what I did is I shrunk it down. So these are the same, you can see that. Things are accelerating, and the reason why, I'll just touch on that for a moment. The overall market cycles may be lengthening and slowing a bit in terms of the length to the next market high, and if you put a regression bands on, it's sort of narrowing, and those cycles are lengthening. However, I do believe that the downside, the bear market cycles, may be shrinking and accelerating, and the reason why is the big money and the whales, and certainly the more people who've been through a prior market cycle, that they know how ugly it can be, and they know you don't want to be holding on to the crypto too long and you know, trying to get out when it goes way back down lower. So they're selling off faster, and then with the intent of putting more money on the sidelines, but we'll recognize a bottom sooner and we'll come back in furiously sooner. This is what I believe, especially with the mass adoption, with institutions sitting on the sidelines, and the potentiality for a regulated crypto markets, and that would lead into and coincide probably with an ETF, a US-based ETF on the spot Bitcoin, and more of those to come. So essentially, that's when more money is going to come back in. They've talked about it extensively, and regulators, once this is a regulated market, institutions who have trillions of dollars of money sitting in the sidelines, they can then invest that money. Whereas now, as an unregulated market, it's really it's too risky, and because of the nature of the regulated entities that they operate in, they're really not allowed to do that in many cases. So keep that in mind. And so, we want to have a solid flushing out here and bottoming, and then that'll give us a foundation to go higher. Question is it going to be more like this if we overlay this a bit from the last market cycle? And it's not an exact science, right? So, but I've just sort of taken that and made it fit a little bit. And so if this were to, this is the other scenario, if we do hold here around this 20,000 level, and if we can put in maybe a few months of consolidation and then break above this trend line, this is a scenario that I don't hear anybody talking about, but this is the certainly likely. Consensus is dangerous, and the more people that are suggesting and saying we're going lower and believing we will go lower, I've been saying it for months, but it concerns me that more and more people are starting to jump on the bandwagon and saying the same, and the market usually fools and frustrates and bankrupts as many people as possible. So that's why we're in a holding pattern. A good time to go enjoy your summer, folks. And this is going to take a little while to play out before it's time to get back in this market, I believe. And so don't have FOMO. We don't want to be running in and buying the dip. We could certainly dip a little lower, but if it's going to hold here, it's going to take a while. If we see a push higher, very likely a bull trap, and we'll look at why that is. But that's what this scenario is pointing towards. If on the bullish case scenario is that we'll hold, consolidate, and kind of push higher here on this 50-month moving average and right above that 20,000 level, which is such a strong resistance level, right? Because this was the top 2017. Was resistance here. It stopped in its tracks November of 2020, broke through solidly in December of 2020, right? So we saw this come up. Now, this was a bit of an anomaly. Again, a lot of money coming in. The money printers were going on full speed, and a lot of that money went into crypto and the stock market. Okay, so we don't have that now, so that's why I'm leaning toward further downside. Always want to keep in mind the overall macro perspective and the levers that are in the markets. Follow the money, essentially. So let's jump over to the weekly chart here. We looked at this pretty much every week. I've redrawn this a little bit. We have the 100-week moving average in green. Didn't offer too much support. Was an early clue, however, when we broke below that certainly we weren't going to put in a new high there. Dropped straight down and broke solidly through that 200-week moving average without even really holding there very much. And so we are now underneath and holding the 200-week moving average as resistance. Yesterday, it looked like we were going to break up above that, but we're going shorter time frames as we go lower to the left. I expected this, though. Often we see these pushes up through, get people long, and a lot of people leverage long thinking it's the bottom. And then, of course, they turn it back down below, liquidating the longs and taking out margin, those margin holders and option call holders. So anyway, so essentially right now, this purple line is that 200-week moving average here acting as resistance. So where we go from here, if this is a green candle and we close in this level here until until the end of the month here, another 10 days or so, we'll see. But this line is kind of what I expect. We will come down. Now, if we come down and test the 300-week moving average here, this is again that 17,000 level. I was saying 16,500 before as we look left, but it's a rising moving average. So let's say 17,000 area. If we come down and test that, I do think we'd get a bit of a bounce and a bull bounce. But if we do see that, this would be likely a reversal area, this 30,000 level, 32,000 here, which was very strong support here, and then but since it broke down below, I expect this would be strong resistance. So in terms of that bullish scenario, we would have to break above 33,000 and hold for me to think that we are going to go higher. And so we could see this scenario if it is a bull trap when we roll down lower, or we could see, and this is something that I'm also leaving open, is a push down to this 400-week moving average as it comes down in this range. I sort of ran out of room here, but I'm looking for 12,500 or so in there, and potentially potentially even 10,000, and maybe even this 97.50 level, which we're going to look at in a minute, that CME gap. So, keep in mind, these are very likely scenarios. Unlikely we just rocket higher from here. Okay, there's still some news to get filtered out, and other exchanges that may be going under that Sam Bankman-Fried from FTX had alluded to. Now, they're probably not major exchanges. There's a lot of FUD out there about Coinbase going under. Certainly Coinbase is very unlikely to fail. They were not in the lending business. So they did have to sort of, as an SEC disclosure, come out and say, as a public company, say that, hey, if we go bankrupt, you could lose your crypto. However, they are sitting on $6 billion in cash, and they really are sort of the poster child of crypto. And the powers that be are not going to want to see Coinbase fail. Certainly, if that happened, there would be a big black mark on the face of crypto. So I don't know. I mean, I think they're going to have some more bad news, but they've got $6 billion cash reserves. So, they're cutting down on their expenses and overhead. They've got a massive war chest. The ones to be worried about are hedge funds and companies like Three Arrows Capital that were investing heavily in projects without collateralized loans. They were taking a lot of loans from these other brokerages like Robinhood and Celsius, and many of these were uncollateralized. So hence, when it goes to zero or it goes all the way down and they can't collateralize on it, then that's the real danger. So anyway, let's take a look here. I didn't mean to pull up on the RSI. Let's take a look at this. So stochastics RSI in the weekly. A little bit of a bounce here, and a upswing cycle is needed and normal. These things do always go in cycles, up and down, and so whether we get a full cycle out of it or not, I don't know. Let's see. I don't think so. We'll see how that plays out. And I don't see any really divergences there. We're seeing similar things. And typically when we find a bottom, we would see some kind of divergence on the RSI. But similarly, RSI bouncing, I would suggest, could pop up to here and then roll back down again, along with price action. And then our proprietary signal here, the trend strength indicator, seeing a little bullish turn. I do like these on the weekly when it turns from red to green. Generally above this 20 line is a long trigger for me if I like everything else. But in the overall scheme of things, I'm not liking what I'm seeing, not strong enough yet. And one of my other indicators that we have developed called the early reversal indicator, which has been very good. As you can see, these print at local bottoms and tops, and called the bottom here in midsummer, and the bottom here, the top, bottom, and then the ultimate top to the week and to the day, as well as the September and October low here, January and March. So basically, and then we had this bearish ERI, early reversal indicator, catching this. I haven't seen that trigger yet on that. So that's what I would be waiting for as my early signal to possibly go in long for this, and coupled with a TSI breaking from red to green. Those are my two things that I go by, and that's just some proprietary indicators that we've created. But at any rate, you can get the similar readings from these RSIs and stochastics and the MACDs, etc. All right, so here's Bitcoin daily. Let's take a quick look at this here. This is my another indicator we have called our radar. So this lets me look at 4 time frames all at once. So we've got kind of a bullish signal on the 1 hour, 4 hour, and the weekly, but the daily bearish. I've got a bearish signal there on the radar. So I'll turn this off briefly and just see why that might be. And not much to see there on that ERI. So but essentially it's overbought. Okay, so here's our trend strength indicator here, showing, and this is basically an oscillator. You could use a stochastics. This is a smooth stochastic with some other indicators that we've overlaid on it, just so we could see multiple things at once. So this is over in the overbought territory. I'm not sure if I said oversold, but this is overbought. So I would imagine we do cycle down from here, and for a period of time, and it's certainly ripe for another down cycle. And to see that here, on this daily chart, it's looking similar to this consolidation that then broke down. And what we can see, though, on a 1 hour, 4 hour chart, really what's playing out is a bear flag. So on the left is the 1 hour, the right is the 4 hour chart. That's the bear flag formation happening here on Bitcoin. So I've been following this here for, since, last, it's really, it started setting up a month ago, but it was a couple of weeks ago, last week, started to realize this could be a bear flag playing out. And sure enough, yesterday on, posted publicly that we're up in this range, that we were likely going to pull down from here, and briefly popped up above that. And then, it is somewhat suspicious, well, let's just say coincidental and serendipitous. How about that? That this was breaking out above the bear flag pattern to potentially invalidate that bear flag. And then, wouldn't you know it, that news came out about Tesla dumping its Bitcoin, $936 million in Bitcoin. And so right at that moment, 4 p.m. yesterday, then we sort of saw this thing top out and start dropping on the news. Interesting, isn't it? Well, we can put on our tin hats for a moment and say, I wonder if that was choreographed. But at any rate, this bear flag here, the measured move from the flagpole top here down to there, if we are to break down below this flag here, that would put us right about this 12,500 level that I was suggesting previously, and that would be at the 400-week moving average. In the short term, though, I would expect if we break that flag bottom, that we would stop and hold at the 300-week moving average, again around the $17,000 level. The longer it takes to play out, that is a rising moving average. So, it may be 17,000, 17,500. These things tend to overshoot a bit also. Just so the market makers can, fake out and get some more people short before they, push it back higher and liquidate. This is, at these inflection points, this is how market makers make money. There is an A book and a B book often that they can hold orders that they don't want to influence price until they want to release it to influence price, and essentially, selling out of their own inventory. But right in here, I was saying this would be the top of the flag. They pumped it higher. Probably people were shorting in here, so they probably stopped out some of the shorts, and a bunch of people went long. So they liquidated the shorts, stopped out the shorts. A bunch of people went long thinking it was breaking out, and then they reversed it, liquidating and stopping out the longs. So a lot of market maker games at these key inflection points. Not so much in the range, but at the key inflection points. So what I would think, that might happen down here. It'll sort of maybe look like it's, we'll see what happens. But at this inflection point here, come all the way down, they might overshoot it. So we still might see the 17,000, maybe even 16.5 might be a bit far. Kind of depends on where that 300-week moving average lands or is at that moment. I just drew this one. But at that point, I would suggest we bounce up back up to around 20,000 as a resistance level, and then roll over if the markets are still weak. Any kind of catalyst could push it higher, guys. Way to know. New information equals new decision, and we can only do our best guess. I wouldn't start dollar cost averaging back in just yet personally, but maybe we'll look at a few altcoins that were looking interesting there. But pretty soon, and certainly if you are going to start dollar cost averaging, or if you're starting to buy the dip, certainly hold some capital until, just in case we go lower and maybe hit some of these levels, and you can thank me later and send me a Christmas ham or some steaks. If I'm right, we'll see. But I wouldn't, certainly it would be prudent to start dabbling. This is not investment advice, do your own research, etc. But anything can happen, and we'll see. So, let's say Tesla comes back in, or some big company or some sovereign nation suddenly invests their entire wealth fund, and there's a lot of money on the sidelines waiting and watching, and we'll see. But I'm going to hold to my guns and wait for our custom indicators before I do personally. So if that happens and we come down to the 400 week, again, 12,500 or so. Now, I had mentioned 10,000. We did talk about this last week. So let's jump back to a daily chart to see why that is a possibility. So in terms of what are we looking at there? The CME gap, CME Chicago Mercantile Exchange futures is what we're talking about here. And so these gaps over time tend to, see, I have them all drawn, and I think I turned turned off all my drawings and didn't put them back, but we can redraw them. So this is new to you. See these gaps here? These are generally when the weekends come along, and then things gap up overnight or over the weekend, and they tend to refill. So here's a gap there. Sure enough, came back and filled the gap there. This gap here, like that, came back down and filled right here. So you see this, how this works. So the thing that, just to cut to the chase here, and we've been watching these gaps thinking, wow, surely we won't break below the midsummer lows, but we did, didn't we? Came back down and filled this gap. So now I'm looking left, where are more of these gaps? Well, we filled that one. So what we need to do now, the only one that's really viable, don't look at that, is this gap from just under 10,000, around 97.50. And you know, I'll be the first to say I did not think that in any way, shape, or form that we would ever get near that. Let me just make sure I'm on logarithmic scale here. And so where would that put us? See that right there? Let me zoom in, but you can see it right here. I have an alert set. See this little gap right there? It wasn't that little back then, you know, where if I go back out, this is a log chart. So, you know, we're sort of makes the prior price action minimized, but this is a big enough gap that it's still open and viable. You can look online for why this happens. I won't go down the rabbit hole here, but essentially, you know, exchanges in the futures markets and things, they can sort of, without taking a loss, they can kick the ball down the field and maybe later at some point in the future then unwind these to make. Anyway, you get the idea. So the 10,000 level, if we get to 10,000, which is a very strong psychological level, you know, certainly at that point, if it's holding or if it's in a free fall, certainly there could be enough momentum to push it below that. And even if it doesn't, in market makers and powers that be, make it look like it's plummeting to earth and going to zero. Of course, that's not going to happen, you know, and you know, strike me with lightning if I'm wrong there, but it's not going to zero, folks. But it could appear that way, causing a real final capitulation if if it breaks below 10,000. People might say, well, my stop loss is 9,900, or if they see it in a free fall and it goes below 10,000, people might be sitting there, especially long-term holders and the Bitcoin miners. You know, they can't afford to mine this stuff here if it goes too low. And so they might just say, look, I'm out, I'm going to dump. And that would be the bottom capitulation. We really haven't seen we haven't seen the traditional hallmark big spike down. It's been a long bleeding capitulation, but I still think so we could see that if we get down to 10,000, seeing a spike down below, right down around, you know, around 9,600, 9,700, that would be, I believe, to be, if we get it, that would be the bottom. I mean, I can't imagine we go much lower than that without some real black swan event, but that certainly historically that would be a massive buy zone if we get down to there. But that's why that is possible. If we're at the 12.5 400-week moving average anyway, to see a fake out dump down below. Anyway, we'll see what happens. You know, it's certainly all conjecture at this point. Don't bet the farm, don't sell the house, don't sell the kids on any of the above advice. So you get the idea. All right, well, so let's see. We don't have a huge amount of time here, but we could probably take a look at Ethereum. I do want to take a look at the DXY, of course, real quick. All eyes are on the DXY because it is at kind of you know, historic levels, although certainly can go much higher. One thing I want to call your attention to, and this of course is an inverse relationship with Bitcoin. As the DXY goes down, Bitcoin goes up. Well, you know, the DXY could come down a little further, but it has been respecting this trend line. As the DXY pushes higher, Bitcoin goes down. So I think we're headed lower on Bitcoin. And so now if we zoom out a bit, we might say, well, you know, 110 level, that's, you know, let's put it on a 2-day or 3-day, you know, this 110 level is like kind of a local top area. But really you need to look out farther to see that it could go much, much higher. Okay, so you know, we are, you know, higher than the recent highs of 16, but if we go all the way back to 2000s, I mean, guys, we're in historic territory, historic levels of inflation, and you know, so, and the everything bubble has burst. So what I want to call attention to here is the fact that this could go much higher. The DXY could go much higher, and whether we go that high or not, what I want to draw for you is going to be a little bit scary if you know what I'm doing here. And this is called a cup and a handle pattern. And, very common. It's a terrible handle there, but you get the idea. Essentially what this means, these have been around for, decades and not longer. So essentially what this means is when the cup and the handle here, when it breaks above the handle portion, when we see this kind of price action breaking above that handle, they will likely continue to break out. So the DXY dollar index, I think, as it pushes higher here, bad for Bitcoin, bad for crypto, and so I think that this is what we'll see over the coming months. Similarly, USDT dominance, the percentage of money in Tether, and so we'll just zoom out a bit on this one. So this is holding here. Again, inverse relationship. So as USDT goes up, that's money, basically money going into Tether means money coming out of crypto, and generally that's predominantly Bitcoin. Okay, so we are at a support level on the USDT. So I get another signal. We're looking for clues in confluence. Another signal that we could be seeing a turnover and lower lows on Bitcoin. So I'm, certainly I'm like 80%, 80, 90% sure that will happen, and leaving a 10% outlier. Okay, so with that, let's take a quick look at the total market cap. Again, we're back up over $1 trillion market cap, barely, but also a big bear flag on this pattern, as you can see. And so the measured move, depending on how you draw it. So in the, we in this sense, we sort of that move has completed. And so let's take this off and we'll have to see. 1 trillion, really important we hold that $1 trillion level, otherwise it could be heading much lower. And similarly on Ethereum, let's take a look at Ethereum. It had a nice bounce off of the $1,000 level and I was tempted to go in, really was tempted to go in and go all in on that, put it in my IRA. But I just have a feeling that if things go roll over and we lose the total market cap levels, and some of the levels like the total 2 here, let me see if this is the chart I wanted to show. Basically, no, this is here. So if we lost 800 million, then the total market cap, we could see drop down to the 500 to 600 billion dollar level. So if that happens, then Ethereum, my targets would be around 500. That's when I would be 500 to 650. I've got some alerts drawing down here in this range is where I would be buying a lot of Ethereum here. If we get down there, there's a nice liquidity pocket. Let me just move this, it's not needed there, but right in here, nice consolidation liquidity pocket there. I think that would hold in this range. And so it was a very strong resistance. The $500 level back in August of 2020 came down, broke through, and this was a accumulation zone. So I think if we get into this $500 to $600 range, good place to pick up some Ethereum for long-term hodling. Other than that, we can look at a few altcoins here if we want to do that here just briefly. I've been watching some of these last couple of days, been looking good. Rune is coming back up into interesting ranges, but with everything looking overbought, I would really suggest not buying here. Are my oscillation levels and indicators. My trend strength indicator is showing overbought here, so these are levels I would suggest we'd see a pullback here, and the early reversal indicator as well. I'd want to enter on that on red turning to green and a green ERI. You could use stochastics and other indicators like that if you'd like as well. So without going through too many of these, what's moving? Polygon Matic has had a nice move here and a great spot to pick that up back in here, but who knew? The things I do look for is when they break above these trend lines, so that would have been a good signal there. Not only this was resistance, and broke through, now acting as support, had a green ERI signal there. Let me just turn this one or hide this, and sure enough, it's had a nice little move. It could be forming a new uptrend. I would keep an eye on Polygon. When things are weak, look for what's strong. And then when the market turns, these are going to be the strongest generally. So the tool I'm looking for, bear with me here, is this parallel channel. And so let me just do one of these, and completely did that wrong. Sorry about that. And let's see there. Okay, there, and now we can kind of do this kind of thing. So it does look like it's in a new channel. I would watch this on Polygon. Really like this project, and you know, it seems to have broken out of its prior channel. So we'll see what happens. I think these are some good projects to watch. If we do get another leg down, this here, I don't know. This could be. You know, I'm not saying it is, but it could be seeing some kind of a bear flag kind of playing out like that. Yeah, possibly. That would be a big one, but I don't want to draw straws in the air or whatever the saying is if it's not there yet. So we'll keep an eye on these. eGold, basic attention token, all good projects, I think. And seeing, you know, if these were the lows and this is consolidating, then hey, if you bought it down here at 30 cents, good for you. I was watching these, considering it had these liquidity zones drawn, as you can see here, but was really waiting for a clearer overall market signal. Bitcoin as our North Star, of course. So, you know, we want to wait and see till the big boys kind of bottom out. But projects like Helium, sub $10, you know, Helium, Cosmos, Atom, you know, having a nice bounce. But these are on overbought territory. But, you know, even if you were to buy here, I'm not suggesting that, but at $10 to get back to its old high around 45, that's still nearly a 5x return. So pretty soon we're going to be seeing some really nice bargains, but I think these could certainly still be a bull trap, and you want to be aware of that. Let's see some movers here, CRV Finance, you know, but I don't know, that could be an inverse head and shoulders forming. We'll see. These are some patterns to start looking for here in this sort of wait and watch market, which we're in. So patience is advised. You know, Solana, $43, and had a very nice bounce there, but you know, I don't know, not really strong enough for me to feel this is bullish. The other thing I normally have on here is the 21 and 50-day moving averages, and for some reason, let's see, my EMAs are all messed up here for some reason. So what do we have? Is this is my 50. Okay, that's right. This is I used several computers, guys, so sometimes the colors are different and the lines are different thicknesses. So yeah, so the 50-day moving average, you know, we are seeing a turning up, not the vegetable, turning up of the 21-day moving average above the 50. But we have seen this fake out before. We saw that here, and you know, so I'm not convinced that this is it. So I'd want to see it pull up above and retest and go higher, and whereas this failed. And I do like to buy into strength and to be safe. So generally, all right. The other one I'm keeping an eye on, a Phantom coin. You know, these are not recommendations to buy, obviously, but you know, some interesting ones from last year that when they turn, might have some really good upside. But you know, it's we're in no hurry. We're going to be patient and keep an eye on what's looking strongest. You know, AVAX having a little bit of a bump, but you know, there's just not enough push just yet to signal that we're going to go much higher yet. It certainly could happen, but you know, I would suggest that, you know, we still could see another retest. You know, if we keep putting in higher highs and higher lows, that's generally good. But keep in mind these bear flags can be gnarly when they start to play out, especially with a really long, you know, flagpole like that. That would be devastating if that were to break down to the downside on a bear flag. So anyway, that's all I have for you guys today. Be sure to down below let me know if you like these sessions, if there's anything else you want to look at, or any different projects. I know some of you have posted in there, and we tried to cover a few today, but for the most part, we're in a waiting and watching pattern. Keep your powder dry, and you know, we'll be watching, you know, the big macro signal that we're watching here that I didn't mention is this MACD. So, you know, we're seeing a bit of a bounce on the RSI, but this MACD, I mean, it's fallen. I've been saying to get out of this market since November, and for a good reason. So when we tipped over to negative range, I was pounding the table to get out. So certainly that was good, you know, good time to get out, sitting in cash. But this is going to take a while to reverse here, maybe a few months, and so, you know, the really best times to get in these markets are when it starts turning green again on a monthly basis, and it may take a little while. But if you're longer term and you want to kind of watch that, feel free to keep an eye on that. Getting a bit of bounce on that RSI here along with the market. So no divergences just yet. So anyway, thanks everyone. I hope you enjoyed it. This is Brett Fogle, and thanks, Max, again for having me, and really enjoying being here with your group here. And again, remember to like and subscribe to the channel if you haven't already. We'll be doing these. I'll be doing these every Thursdays. So hope you enjoyed. Stay safe, trade smart, and make sure and keep your stop losses just in case. Short base hits and bounces. That's okay if you know what you're doing. But otherwise, get time to wait and watch. Stand by. All right, everybody. Take care.